Right, so C3.ai reported total revenue for the quarter came in at $70.3 million. Now, whenever you see a company report total revenue without sharing with you whether this was an increase or a decrease, you should automatically have the alarm bells going off. Usually, when a company has big revenue growth, they will highlight it and they will present it to you with big, bold numbers and adjectives. Here, the company strategically leaves out whether or not this revenue was more or less than the same quarter they reported last year. And that should be a hint to everyone that this revenue number was less than where it was last year. So the business decreased year over year, which is bad news for investors, which is, I think, the reason why the company leaves it out here in the front page, right at the top of the page. They don't want to reveal that information so quickly. They like to bury it like in page 8 of the financial reports. It's not just C3.ai that does this. I've seen many companies do this, where if the number is not appealing, they'll bury it down lower in their press release. All right, so now that the stock price crashed following the earnings release, remember I did a video around July 23rd where I told investors not to buy C3.ai stock. I kept it rated as a hold. And now the stock price is down near its 52-week low, is trading at $16 per share. The intrinsic value per share I calculated is $30. So it's now trading at a significant undervaluation to my intrinsic value per share calculation. Still, the risks are extremely elevated with this business right now. They're going through a leadership change at the top that's already impacting sales and profits negatively. What's more, the management team is forecasting a continued decline in sales with losses on the bottom line continuing. So this is a company that was already a high risk investment, but now those risks are magnified further given the changes at the top and given the restructuring of the sales organization, then the declines in revenue. Still, I think the undervaluation is now significant enough where investors can now start buying this stock. So I am upgrading this stock today. I had it previously rated as a hold, and I've had it rated as a hold for the longest time. I don't think I've had this stock ever rated as a buy before. But today I am upgrading this stock to a buy, even though this is a high risk investment. This should only be for those investors that are willing to tolerate above average risk or very high risk in exchange for the potential for high rewards.
Click the link below to watch the full video.